Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we'll take a look at the Australian dollar because in the forum a lot of questions about the Aussie and what's going on, what to expect in the nearest future and what could happen. Well, here is a lot of background, including some fundamental moments exist on the Australian dollar, but we're focused today on the technical picture. Fundamentally, just a few words that you know that Australia is one of the biggest providers of the commodities to the China, and as the China economy is coming out from the recession, that should be supportively for Australian dollar and for Australia as well. But currently, as you heard probably, that's another risks of the virus in China appears, and currently nobody could tell definitely what the results will be, what the consequences will be of that. But this is a bit different topic. From the technical point of view, guys, in two words speaking, this is not a good moment for taking the long position in Australian dollar. Because, first of all, market shows the first pullback after the strong downward action. This has happened here and it's last since 2017, so more than the 2 years market stands in downward trend, especially when you saw this pandemic acceleration down. And currently it's first jump up out of this trend. So on a monthly chart we could say that we probably could treat this situation even as some kind of the bread and butter sell trade, because market shows the downward trend, first upward pullback hitting the confidence resistance on the monthly chart. This is, guys, not the joke. This is a really rock hard resistance area. This is monthly chart and monthly confluence, so that's extremely strong resistance area, and the chance that market will pass through it as it now exists, especially after the strong sell-off, stands, well, very low. Most probable that we will get here at least the deep retracement. Usually bread and butter suggests retracement at least for a 618 level, so it should be somewhere around 60 area. So that I would consider if I would trade on the monthly and weekly chart. Here I would consider a chance to go short, because that's definitely a situation that suggests the downward retracement. This retracement should be big, so approximately 10 points. Here 69, we expect 60, so 9 points to the downside. This is, well, very significant action. Also take a look. Beyond the confluence, we also have the previous lows. It's also natural resistance area. And if you will take a look at the weekly chart, you will see that market stands on the weekly overbought. Here, guys, no chances, at least from the technical point of view, to consider taking the long position. I would consider taking the short. On the daily chart, market is forming strong action. We have this ABC pattern and the XOP that stands 7120 area. Those who trade on the high time frames, on the weekly and on the monthly, you could consider taking the short position here with the stops above the XOP and above the weekly overbought area. So you could do it somewhere in this level, because for you it's not really very important where particular for the few pips higher take position or few pips lower, because you're trading on the monthly chart. And from the monthly chart you already have the patching in place. For those who trade on the daily and intraday charts, here you should probably wait when the market will hit the XOP target and then starts watching for a bearish reversal pattern that should be formed on the daily and intraday charts. For example, this is just an example. It's not definitely the shape that definitely will be formed, but that's just how it could be formed. It's one of the possible scenarios. Since we have the XOP at 7120, here, to complete the XOP, market could form some butterfly or something of that sort, because 127 extension of this action stands approximately 7140 area. The forming of the butterfly simultaneously will put the background of the reversal, because butterfly is potentially a reversal pattern. So very often becomes the part of the hand shoulders. And also it will help to hit the XOP on a daily. So from the technical point of view, all necessary target will be hit, and market finally could start turning down, starts to form bearish background. Then you could use the butterfly for taking the position, of course, but you could wait for a more extended pattern. One of them, it could be head and shoulders pattern. And after that, theoretically, market could continue downward action, starts downward action right to the 60 even area. So that's approximately how it could be formed. On the 4-hour time frame chart here, of course, it could be different patterns. For example, market could form the butterfly and then sharply start to sell off, especially the new rumors from the China about the starting on a new wave of the COVID-19 will start, or something of that sort. Some other negative issues could be in the headlines. So a lot of different stuff could happen. But this is just one of the possible scenarios. I'm not sure this will happen even right at this way. But what is more important for us is the XOP and, of course, the monthly strong resistance. It means that around this area, we mostly should be focused on the bearish signals, bearish patterns, and not consider taking the long position currently.